Good morning traders, I'm James Harte and welcome to this Orbex Market Insights video. So today we're going to be looking at the SPX 500 and the UK100 charts. Now equities prices have had an interesting time recently. We had the dovish FOMC meeting last week which lit a fire under risk appetite as the Fed confirmed that it won't be raising rates in the near future. However, other developments over the week, such as news of a massive fine for Google, as well as the ongoing investigations into Boeing, have taken a toll on risk appetite, seeing equities coming off from last week's highs. We also saw a strong post-FOMC recovery in the US dollar, which also weighed on risk sentiment. Now, we've got a pretty quiet data sheet this week, so it's going to be interesting to see if equities can make a recovery or if we're just going to stagnate. So, looking first of all then at the SPX 500 4-hour chart, and you can see that we've got a couple of pretty important developments to note. So, the first is that following the spike higher into fresh 2019 highs last week, we've since fallen back below that 28.1857 level, which was the February high. You can see we posted that over here. Now you can also see that the decline has taken price back below the rising trend line from 2018 lows. Now this move shouldn't be too surprising. You can see that the RSI indicator was flagging up pretty solid bearish divergence, highlighting the risk of a move lower. However, traders are now waiting to see if this is just a correction to the bullish phase or the start of a broader reversal lower. So in order to answer that question, it's really going to come down to whether or not price can get back above that broken bullish trend line and back above that February high level. So if we drop down onto the hourly charts then, and you can see that at the moment price is currently retesting Friday's low. Okay, so we broke down below that bullish trend line. We've since stalled and we're now starting to pop higher, and at the moment we're retesting Friday's low. So there's plenty of room, plenty of work to do here going to the upside. Price needs to get back above that closing low, needs to break back above that bullish trend line, and then eventually get back above the 28.1857 level in order to alleviate immediate downside risk here for bulls. So again, keeping an eye on the US dollar this week. We've got a pretty quiet data sheet. Aside from PCE at the top of the week on Friday, there isn't a lot else to report. So it's going to be interesting to see here if the US dollar continues to extend its recovery, which could keep equities pressured, or if we're going to see equities getting back above to the prior levels we were looking at last week. So moving over to the UK100 chart then, again starting off on the 4-hour chart, and again you can see that we had this pretty solid decline last week. Obviously the UK100 coming under pressure also from ongoing Brexit uncertainty. So that decline from last week's highs, which again, like the S&P, were fresh 2019 highs, has seen price trading back below the 72.62.7 level, which again was the February high. Now, while we remain above the bullish trend line from 2018 lows, for now the bias remains for a further upside. However, bulls are going to need to see price getting back above that 72.62.7 level pretty quickly. But again, while we stay above this bullish trend line, the bullish phase looks pretty solid for now, and this should just transpire to be a correction within that move. Now if we drop down to the hourly charts again then, you can see that we've posted a really solid bullish engulfing candle this morning, which is a strong bullish reversal signal. So for now it looks like the market is doing its best to get back up to those prior high levels. However, you can see the extent of this decline that we posted last week on the hourly charts. We had a solid run of consecutive bearish candles there, so there is plenty of upside room to go for the UK100 chart. So we'll be keeping an eye on both these pairs over the week. As I say, very quiet data sheet. However, specifically with the UK100, there is of course ongoing two-way risk around the ongoing Brexit situation. So the UK FTSE then remains fairly sensitive to any headlines regarding the Brexit situation. So keep an eye on the blog over the course of this week then, as we'll be updating you on any events or developments which we feel are important to your trading, always doing our best to serve traders responsibly. So, thanks a lot for joining me today. I hope that you found this session useful. As I say, keep an eye on the blog over the week. We have got a quiet data sheet, but the Brexit situation remains very fluid, very dynamic, so there is plenty of two-way risk there. And you can follow all of our technical analysis and our fundamental analysis, as well as our daily market insights videos. Okay, I'm James Harte. Thanks a lot for watching, and good luck with your trading.